Welcome to Truth, Money, and Freedom. Today is Tuesday, March 19th, 2019, and I have with me today Conjecture, and we're going to be looking at a important news story that came out today about the Federal Reserve. The title of the article is Fed Seen Revealing How and When It Will Stop Shedding Balance Sheet Assets. So thank you for joining us today, Conjecture. You want to tell us a little bit about this article?
Yes, the Federal Reserve, well, not the Federal Reserve, but Powell, actually did a little press conference in which he basically said they were going to be ending quantitative tightening through a tapering process. However, they have over $1 trillion of mortgage-backed securities in their balance sheet they want to even through this tapering and ending of the tightening process.
So they're looking to get rid of 1 trillion more of the mortgage-backed securities they have on their balance sheet. Is that correct?
Yes, and in order to keep their balance sheet level so they can say they're technically not doing quantitative tightening, they're going to be replacing them with treasuries.
They're going to be replacing them with treasuries. Wow. So basically, they're not really doing much of anything at all. They're going to be replacing them with treasuries, supposedly with, for instance, the United States government is borrowing about 1.2 trillion more than it has collected in taxes for fiscal 2019. So basically, are you saying that those bonds for creating that new money for the United States government for fiscal 2019 may end up on their balance sheets?
I'm not entirely sure how this is going to play out, but it
Because
says they're going into.
the only reason I bring that up is because that's actually called monetizing the debt. And that's something that Ron Paul warns against all the time, which is when the Federal Reserve actually buys up treasuries and holds them, as opposed to letting them go into open market operations.
Yeah, it will. It'll keep rates lower.
Sure.
So that's one reason why they're probably doing it.
Now, right now, the interest rate committee is meeting. In fact, I do believe it's tomorrow they announce. Is that? I think that's correct. Wednesday is when they announce. Um, so right now, the 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 consensus was they were going to raise again. Then the Fed came out when they raised last time and they said, well, we're probably going to reverse course. I'm sorry, that was the midpoint meeting. That was 6 weeks ago. We're probably going to reverse course. And now they're saying, well, we're going to probably hold even because the economy is nice and strong. So that tells us right now that they're probably not going to raise interest rates and they're not going to lower them tomorrow. They're going to keep them the same. Is that your take on this as well?
Yep.
Okay. So we can expect that because the market is definitely pricing in either a lowering of interest rates or a holding pattern. I guarantee you the equity markets are pricing that in. It's been priced in. That's why the equities are going up right now. If there was another interest rate hike coming tomorrow, and this is, once again, I'm not scaring anybody here, but if there was a surprise hike tomorrow, there will be a market crash tomorrow. Um, Crash is not a good word. There would be a significant downturn in the markets tomorrow if there was a hike. So right now the markets are anticipating right now a holding pattern or a lowering of rates. So, and that seems to be consistent with what the story is talking about too, because they're being awfully sheepish about talking about raising rates right now, aren't they?
Yes.
Okay. So, so what else do you see in this article here? We know that they're looking to shed. By the way, it looks like they have. Looking at this chart that's on this um, website right now, it looks like they have dumped 500 billion of their CDOs that they had purchased after the 2008 crisis, because they're now down to 4 trillion, 4 trillion on their balance sheet. So they're looking to actually bring it down to 3 before the tapering ends. So if they continue selling, but they continue holding bonds in the place of those CDOs, their balance sheet would technically remain unchanged. Can you see a strategy within that for the Federal Reserve? Conjecture?
The only strategy I see is it's a measure to control the interest rates on the debt.
Yep, that's what I'm thinking too. And in fact, you were even seeing somewhere that it looks like they may be lowering interest rates for the federal government, but maybe not for everyone else. And that wouldn't surprise me. That would be another weird tool that they would take out of their toolbox, like they did in 2008 with negative interest rates and bank bailouts and all kinds of weird stuff that central banks were doing.
Yeah, by basically just flooding the market with, liquidity in order to bid, the bonds up
Hmm.
in their interest rates.
Okay, gotcha. And of course, I'll link this article down below, and this is from Market Watch. Conjecture had found this earlier. Uh, Conjecture, I'm now looking at the chart here, the SPX chart. Can you kind of tell us a little bit about what's going on there?
Oh, it's a little chart that I found a while ago that just it simply discusses how the markets have kind of reacted with the news.
Okay, gotcha. We have a little dialogue going on in this chart. It's kind of funny. So you see at the beginning here, at the beginning of the chart, Trump says, let's start a trade war. And then the markets, get all wonky. And then the markets, about a quarter of the way through the chart, say, let's focus on tax cuts. And then, of course, the markets go up. And then Powell says, we're a long way off from neutral and QE is on autopilot. Then the markets go all wonky
Meant
again.
QT.
There, there you go. QE actually is what it says on the chart. And Powell says, I was just kidding when the markets crash. And then Mnuchin calls, the PPT, which, by the way, that's not even a joke. That actually happened. And that's the scary part. So the Plunge Protection Team, also known as the Exchange Stabilization Fund, which is a branch of the U.S. Treasury under the executive branch, basically, so it's under the control of the presidency, um, literally um, literally tells the Treasury, we're going to go ahead and evoke the PPT. We need to go ahead and throw money at the markets. So they print money out of nothing with a special account they have, which is basically on loan from them from the Federal Reserve. They print money and start putting it in the markets. Look at how the markets go up after that. That's that new run we're seeing in the markets right now. So the only thing that's left here is it's not necessarily American, but we have two major events coming up after the Fed announced tomorrow, and that's on the 29th of March. We know that gold is going to be valued as a tier 1 asset by the Bank of International Settlements. We've done a video on that. But we also have Brexit. There's a high probability of a hard Brexit on March 29th. And if there are any changes or developments in that story, we'll definitely do a podcast on that. This is very, very important because it will affect the markets. But the gold thing is pretty interesting too, happening on the same day. So, any thoughts on those, Conjecture?
I don't know. I get the feeling there's going to be a curveball. Either they're going to delay one or both of those events, or miraculously, we might have them both on the same day. And if we do, something weird will happen.
I almost tend to agree with you on that because they're doing squirrely stuff right and left now. This is why the markets are so wonky. We've never seen them this wonky before. It's because number one, the markets aren't real. They're just not real. There's too much manipulation. There's too much easy, cheap money, in the system. But also, too, I think everyone realizes the fact that gold is going to be rated as a tier 1 asset, backing up currency once again as a reserve. As a reserve, like I said, I don't want people thinking you can take gold down to the store and buy things. That's not what they're doing, but they will be making new money based on their gold holdings. And that's literally holding it in reserve. But these are both major events, Brexit and Basel III. And if there's any new stories on Basel III, we'll certainly bring them up as well. That's a very interesting story. And we're a small channel, and we've been getting a lot of hits on that video. So people didn't know about it. They are interested in it. So we'll be following that very closely for everyone else as well. But for now, we've run out of time. And I'd like to thank Conjecture for joining me on this today. Conjecture is on our Discord server, Truth, Money, and Freedom. He's a valuable member there, and he provides a lot of insight. And we have lots of people like Conjecture, but Conjecture is one of those wonderful exceptions where he's just really on top of the ball on a lot of the stuff happening within the markets, not just in the United States, but the world. So we have a very unique Discord server, and there's a link down below in our section. If you want to come in and chat with us, we have a voice chat in there. You can actually come in there and chat with us about these things. Thank you for taking a few minutes out of your day to listen to us. Have a wonderful day.